Coca-Cola just releasing results. Sarah Eisen joins us now with the details. Hey, Sarah.
Hey, good morning, Joe. So it was a beat, as you guys just reported, on the bottom line, on the top line. And here's a big surprise, an upside surprise, 11% organic revenue growth. That is going to come as good news for Coca-Cola investors and analysts that were expecting more like 7% organic revenue growth. The story here continues to be pricing, but another sort of surprise, and what separates Coke from some of the other consumer packaged goods, the food and the beverage companies, is that it's on the back of volume growth as well. So the price mix is 9%. Volume growth was 2%. Some of the other food companies in particular reported zero or negative volumes because those higher prices make it hard for consumers to afford food and beverages. Here's another headline. Obviously, Coke is a company that does most of its business outside the U.S. It's impacted by the strong dollar. That is going to take a bigger chunk out of sales and earnings. In the fourth quarter, it's going to be a 4% hit on revenues and 8% hit on earnings. But the company is raising its full-year forecast in a sign of confidence in the higher top-line growth. I did just speak with James Quincy about all of this. He said that every category saw growth during the quarter, and they saw growth in most parts of the world. India actually led the growth, and Latin America also came in very strong. We talked about China as well. He said the market there is not bouncing back, clearly, as quickly as the U.S. and Europe, not seeing a ton of growth there. And obviously, they don't get the pricing power there as well because of the lack of inflation in that market. As far as the U.S., Quincy says that inflation in the U.S. is clearly moderating. What we saw here in this market in North America with pricing was up 5, volumes were 0 growth in North America, but he said it should continue to come down, those higher prices. As far as how the consumer's doing, he said certain parts of the consumer, you are seeing pressure, the low-income consumer, something that he and other CEOs we've heard from are talking about, smaller basket sizes or shopping carts when they go to the checkout, but continues to see strength in the middle and high-income consumer, continues to see strength in the away from home, going out to restaurants and stadiums and that sort of things. You know, I had to ask about the impact of GLP-1s, the obesity drugs, because this is a sector, all of consumer staples, that has been hammered, yes, on the back of higher rates, but also on worries about what widespread use of these drugs is going to mean for sales of Coke or other packaged food. Here's what he said. A lot of hypothesizing out there about what's going to happen, very little in the way of actual data on how widespread use there's going to be and how many countries it's going to be. Remember, Coke has 80% of its profits overseas. And here's a quote that I wrote down that James Quincy said about the obesity drugs. You can eat less calories, but you can't drink less liquid. And he feels like they're pretty well positioned, Joe, and they've been transitioning to things like Coke Zero Sugar and bottled water and sort of helping the consumer along this journey of fewer calories anyway. So he feels relatively insulated and protected from any mass use. We're going to talk more about all this with James Quincy, 10 a.m. Squawk on the Street.